Wednesday morning, everyone, on June 27th. As we're approaching end of June, before oil news, 30 minutes before, let's take a look on proprietary Fibonacci levels I developed in 2008 and been teaching to traders from beginner to hedge fund manager in US and globally since 2011. This level's been identified days in advance. This is key Fibonacci support. Knowledgeable day trader takes entry with institutions. This Fibonacci resistance been present in front of you since Monday, been reached yesterday afternoon, and here it is in front of you right now. Absolutely expecting S&P at the next level. Next. What knowledgeable trader knows? This is the end of the minor trend. This is not the place to buy into. Everyone seeing this? If you choose to buy into Fibonacci resistance without rules, nothing good is ever possible. Knowing quite well that price is heading here, knowledgeable trader knows buying at support upon retracement is the only way you will succeed. Playing by the rules is a key. Obeying the rules is essential. Take a look at the twin charts and let's take a look on oil next. This is Apple. Identical image. Apple finally broke through Fibonacci resistance and skyrocketed. Absolutely no surprise. This was Apple. Key support and key resistance. No surprise. For months. And this is S&P heading to here. Everyone seeing this? Powerful pullback is a key before your entry. So let's take a look on oil while we're waiting on S&P to give us pullback. As buyers fully in charge, S&P at the end of the minor trend on Wednesday morning, identified since Monday morning. S&P reminding you Fibonacci is the only natural predictive tool in the market. If you know how to apply Fibonacci levels, you can decide what instrument you want to trade. Here's chart on oil present in the room since Monday. Take a look on this dance on oil as oil danced between minor trends for days. Finally broke through this level and skyrocketed to Fibonacci reversal zone. Oil been dancing in massive correction. Everyone seeing this? This is your day trading chart. Buyers fully in charge. What do you need? You need retracement on oil. More powerful the retracement, more powerful your bullish point of entry will be. As a knowledgeable day trader, you're trading with institutions, not against them. This is where oil chart buyers stepped in from. Everyone seeing this? Oil at historical highs this morning in front of you at the time of the news. As I said for years, oil heading here, then here, then here. Let me remind you the importance of trading based on the rules. Let me remind you where oil was years ago. Chart present in the trading room for years. Do you remember oil at reversal zone at 29? Beautiful place to buy, not the place to short oil. And this is where buyers stepped in from. Reversal zone. As expected. Rules are met, take a trade. And do you remember oil between minor trends? The entire year, mid-2016, 2017, with 55 being crucial resistance? Taking oil a year to break through. Ultimate resistance became ultimate support. Oil heading to here, here and here. Knowing where to take position, you must play by the rules. Oil at historical high for day trader, not the place to buy. Monitoring for retracement is a key. Identical formula on every single chart, no matter what you trade. And here's S&P bullish rally in a progress. Everyone seeing this? Powerful pullback is a beautiful news. As we knew extremely well this morning, S&P was at key resistance, buyers fully in charge, no reason to short whatsoever, none. Knowledge is power. What you choose to trade after you learn the method, absolutely up to you. And here is NQ. Look at NQ. Chart present in front of you since Monday. Do you remember what I said on Monday morning? You know the rules, you know what to do. Where did the buyer step in from? Ultimate trend inception. No surprise. Identical chart as on oil monthly. Twin images. No surprise. Oil struggled at decision point 1 for months. Bright green line. This is NQ now. More powerful the retracement, better off your long will be. If you know the rules, you know what to do at trend inception. This is not the place to buy. This is a place to monitor for retracement. Ultimate test will be at this level, as NQ is heading here. Pulling trigger randomly, never a recipe for success. Knowledge is. So, here's S&P, as expected, as spelled out since early Monday. What is S&P doing right now? Take a look. Reminding you, never ever ever pull a trigger randomly. More powerful the pullback, better off your long will be. And as you witnessed since Monday morning, when buyers stepped in with vengeance, at key Fibonacci support, as students reporting in the room, trading outside of trading room hours, ultimate point of entry, including European session on June 27th. Fibonacci is the only natural predictive tool in the market. And that's what you're witnessing in the room every day, and that's what you're mastering in the course. So here's your day trading chart on oil right now. What are we expecting before oil news? Again, we're very close to historical highs. This is not the place to buy. No matter how bullish the news is, you absolutely demand powerful retracement. More powerful the retracement, better off your trade will be. Again, this is brick wall for day trader. Warn you, doesn't matter if you trade 1, 2, 3, 4, 5, 6, 7, tick chart, range chart, not the place to buy. More powerful the retracement from this level, better off you are as a trader. Historical highs next on oil. Phenomenal bullish news does not mean a thing. Knowledgeable trader demands pullback. Only then he will place a trade. Bullish rally overextended. At the time of the news, I'm converting this chart to 1 minute chart. As again you're witnessing exact same identical resistance as you saw on NQ on any chart you trade on oil. As again, I'm warning you where S&P is now, not the place to buy. Are you surprised? Retracement in a progress? More powerful the retracement, better off you will be as a day trader. Here comes the reminder of the importance of playing by the rules and never ever pulling a trigger randomly. That's all there is. Pure price for entry and Fibonacci for exits. Every day, every time, exact same formula. On any instrument, any time frame, any platform you choose to trade. So if S&P collapsing, it's a beautiful thing. If oil will do the same, it's a gift. Overextended bullish rally on both, not the place to buy. Monitoring for short on both. So here again, oil on 1 minute chart. To the tick, I always convert chart to 1 minute before oil news. I warned you, it's not the place to buy. This is key support on oil. We need a powerful pullback. No matter how bullish the news is, this is not the place to buy. Pullback is a key. This is first support, nowhere near as spectacular as this one. Again, identified, oil heading drastically higher. Again, chart present in the room for years. Institutional chart on oil. Oil heading here. Historical high, not the place for day trader to buy. Pullback is a key. Oil news in 10 minutes. This is what we're expecting on oil news. -3 ME on oil, more negative the number, more bullish the news. Everyone clear on that? Nothing less, nothing more. No matter how bullish the news is, currently for day trader, not the place to buy. I received question about Gush. Gush is 3-time leverage of long crude oil ETF. So this is a major problem on Gush, this area. Gush is heading to drastically higher levels, but this is a very big issue on Gush. Identical structure as you're witnessing on S&P. Identical structure as you're witnessing on oil right now, 1 minute chart before the news, as I warned you. Reversal zone, not the place to buy. First 5 minutes allow oil to settle down. Oil news in 3 minutes. So keep your fingers crossed, both S&P and oil will give us powerful retracement. Exhausted bullish rally taking a massive pause on both. Buy from support. Never ever 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 randomly overextended bullish rally. Most dangerous place to be. And again and again and again. No matter what chart you trade on oil, do you trade 5? Levels remain the same. Do you trade 15? Identical formula. All the same. Overextended bullish rally, close to reversal zone, not the place to buy. 3 minutes till oil news. 1 minute chart. Here we go. Trump announcing sanctions on Iran. No purchases from oil since November and encouraging other countries to do the same will create more shortage of supply on oil. Will be even more bullish news. Look at that. Reversal zone, not the place to buy, as expected. Incredibly bullish news on oil. Take a look at that. 9.9 versus -3. Extremely bullish news. Let's take a look what oil doing now. Oil reached key Fibonacci support, finding buyers. Right now, oil reminding you, key Fibonacci support respected. Absolutely crucial what oil will do at historical high. Everyone seeing this? Again and again and again and again. As I said for years, oil heading to here. For day trader, we are at historical high. Not the place to buy. Buyer stepped in from Fibonacci support. I will continue bringing up the oil until room close today. Back to S&P traders. Here's S&P. Fibonacci support respected. Quite a pickle for day trader. S&P had been in massive correction for the last hour. Is everyone seeing that? Overextended bullish rally, not the place to buy. Here's oil. 5 minutes after oil news release. Not going very far, extremely bullish news. Too bad, so sad this support was respected. Too bad, so sad oil in correction at reversal zone. If you want to buy oil now, you better respect this as your key target. Historical high. Very dangerous place for day trader to be. Knowledge is power. S&P frozen in massive correction, not the place to short. We've been here for an hour. What does a knowledgeable trader do? Not trades against institutions, trading with institutions. Junky little charts giving you a whole lot of trades. As I said since early Monday, price is heading here. All in front of you, every day, every time. Knowledge is power. So if you chose to buy market this high, you've been in excruciating pain the entire last hour. Anyone surprised? Should not be. Overextended bullish rally, not the place to buy. Buy at support, not randomly overextended market. Clear on that? Every day, every time, the same formula. What you choose to trade, absolutely up to you. 2 days in a row, flawless points of entry outside of trading room hours at key Fibonacci support with institutions. I warned you this morning no reason on the planet to short this market. None yet. Bullish rally in progress. Heading key Fibonacci target. This what oil reminding you. Reversals on its present, the most spectacular bullish news in years, does not mean a thing. Reversal zone not the place to buy. Agree? That pure and that simple. Never pull a trigger randomly. Always play by the rules. If oil goes into freefall, it's perfect reminder bullish news does not mean a thing. Fibonacci means everything. And that's the mantra in the course, and that's the reason hedge fund managers take in the course. What you choose to trade, absolutely up to you. Time and time again. Everyone seeing this? Are you surprised S&P starts selling off? My goodness! Very, very predictable and very, very powerful reminder. Only if you play by the rules, the sky's are the limit. Identical Fibonacci level as on Monday. Everyone seeing this? So what is absolutely crucial right now? This support. Price been sitting here for the last 2 hours. This support is broken. Market becoming very powerful. So here we go, ladies and gentlemen. An hour after oil news. Most historical news on oil. Oil doing nothing. S&P collapsing as expected to the next target. So let's take a look on news and oil once again. Oil in exact same place where it's been after news release. But as I warned you on S&P, that was not the place to buy. We dealt with overextended bullish push, we dealt with massive fluff. We stayed out through junk and fluff. We know extremely well that the only way you succeed in trading if you apply sniper's mentality. And if you do, the sky's the limit. Never ever ever add number of trades. Add the lot size. Spend very little time in front of the screen and trade with institutions. What was the problem this week? Institutional support at the market close on Monday. Institutional support in European session. All levels are reached, identified since early Monday. S&P is crashing as expecting, reminding you knowledge is power. Reminding you the reason hedge fund managers taking the course. The only way you succeed in trading if you apply sniper's mentality, if you play by the rules. If you never ever pull a trigger randomly. Trade is not on 1 minute chart. I'm showing you this trade on very large candlesticks because you see the accuracy of the method. Stop well outside of break even. Key target is reached. Do you remember what I showed you and warned you? This is crucial. This is where you can see very powerful bullish pullback. Temporary, but the pullback can be 4, 5, 10 points. Next. Market heading drastically lower, but you as a day trader who knows the rules knows this is your key target. No surprise. Reached. So, take a look on the chart and let's review what played out in the trading room this week. We've been here less than 8 hours. 8 hours we stayed out through massive corrective fluff yesterday. 5-6 trades at the same time, just like now, on S&P. What in 8 hours you had only 3 trades? What if you did not babysit the fluff? Out of 8 hours, 5 hours of corrections. What if you placed only 3 trades in 3 hours and added lot size? Can you do that? The sky's the limit. Are you surprised buyers stepping in from key Fibonacci target? Should not be. It's expected. Every time, every day, exact same level, no matter what you trade. On any instrument, any time frame. This was key resistance on S&P, not the place to buy. Exact same thing as Monday, where short came from. Now on this short, it's a key target. Look at that. What a flawless puzzle. Did I warn you? Of course. It's key Fibonacci target. And that's how you trade. And that's what you learn in the course. How to apply sniper's mentality, how to be disciplined trader, how not to be trigger happy cowboy. How big is a pullback on S&P already? 3 points. Are you surprised? Should not be, I warn you. We can see phenomenal bullish push as key Fibonacci target is reached. Take a look at this dance. It never gets old, I promise. In a bootcamp, we will be dissecting market every second, every minute. We will be separating corrections from reversals. We will be only playing by the rules. And that's what course all about. What you choose to trade, absolutely up to you. And here are students posting the results. Here's Pablo, complete beginner trader, never placed a trade in his life until he took the course. Consistently profitable. Can you do that? What is 6 points on 3 lots on S&P? 6 points, $300 on 3 lots, $900. That's it? That's the power of knowledge. If complete beginner trader can do it, what is stopping you? Pablo will be speaking in bootcamp. That's what knowledgeable trader does. Look at that. Is S&P skyrocketing? Of course. Knowledgeable trader knows that every single tick in day trading matters, and when key target is reached, monitor for long. That pure and that simple. And that's the focus of a bootcamp. So please come to the website and recognize Only 4 spaces left. I can't wait for July 9th. July 9th, favorite event of the year. We're not wasting a second of our time. We're mastering corrections, monitoring reversals, playing by the rules. Review the information, underlearn and recognize. For new students, it's savings of 888. As new students not paying for a bootcamp. Bootcamp group course 8 weeks, private mentoring 16 includes bootcamp. Any questions? Listen to the students first. Students like Pablo, who trading method in US and globally. From complete beginner trader to hedge fund manager trading the method. After you listen to students, never hesitate to contact me. info@fibinstitute.com 925-257-4298. Sooner you sign up, more prepared for bootcamp you will be. As S&P reminding you, only Fibonacci will give you this much accuracy. Nothing else ever will. No matter if you trade in Q, no surprise, exact same target, present in front of you since early Monday, reached, as I warned you, not the place to buy. All the same formula. Exact same target on gold, not the place to buy. From key Fibonacci resistance until key Fibonacci target. What is the difference? This is your investment decisions. What you choose to trade, absolutely up to you. And if you trade in JNJ, you know it is sitting at key Fibonacci target. All the same formula. And that's the power of knowledge. And that's the ultimate reminder. Only if you play by the rules, the sky's the limit. Flawless trade. Thank you traders so much for your time. Look forward to seeing you in bootcamp.